Good evening, everyone. I hope I am audible loud and clear. And I would like to start today this evening IBS class with a thank you note to the ICAI. This IBS, particular as a subject, is one of the my favorite subject, I will say. And if you are joining IBS session this time, first time, then I'll tell you that this IBS is a very practical exam. What is going to happen in the IBS is, like what we suggest from the industry perspective is that this IBS is shouldn't be considered as an exam, but it is a practical approach to what is going outside in the economy, how you will be handling a particular client. So it is a practical situation. The model with which the IBS is prepared, it is prepared with a thought process that if in the practical environment a client is sitting in front of you and that client is having some queries and that query may be relevant to different service lines, it may be different domains that the client is confused about, or a problem that he is facing can be a kind of a hybrid of various aspects or concepts that you are going through. So how as a professional you will be handling? There is a very good saying that a degree is not what you will make you a professional, but when you will become a professional, then you will get a degree. So it means the mindset is something that you need to start working upon first, and the way you will start approaching the things, like if you start behaving like a professional, then you will be able to achieve the degree by default. So when you will be appearing for IBS kind of an exam, my humble request will be to not to consider this as a exam at all. This is a practical situation. All the case studies that are there in the exams, they are actually from the practical industry backgrounds. They are actually the realistic clients. They have been taken from the practical environment, and those client-based case studies are there. So if you are a consultant, if you're working like an advisor, if you are a qualified chartered accountant in practice or in job, then these kind of practical situations are something that you are going to face on daily basis. There will be clients with different kind of practical problems with different situations, and then they will need your suggestion, your consultancy, your guidance, and then they would definitely like you to explain how to handle those kind of situations. So my name is Amit Rathod, and today we will be discussing about how to handle these IBS examinations. And in today's session, we are going to cover two case studies. So after covering the first case study, we will go for a break of 10-15 minutes, and then we will cover the second case study thereafter. If in case in between you will have any questions, then you are advised to write on the chat box. In between, as in when I will get some time, I will look into the chat box and will try to address and answer all those questions which will be there. Okay. I have around 15 years of experience from the industry. I have been part of almost three big fours and right now associated with a very big company, and with total 15 years of experience, this all experience comes from the audit as a background. So when we are talking about the audit, it is the exposure with this particular service line with particular domain. I got an exposure into from various industries and all. So I will try to touch base on that industrial exposure as well, to the extent it is relevant to the in the case studies that we are going to cover today. I will try to include that practical exposure over here for the benefit of all the students as well. So let's start with the first case study for today. I will be sharing my screen and just let me know if it is visible. Okay. Anyone, the admin team, the IT team, anyone can confirm? Is it visible?
Visible, sir.
Okay, perfect. So the first case study that we are taking up is for a PSU, which is a public sector undertaking. So this PSU is into the chemical manufacturing kind of a business, and then they are manufacturing these chemicals for the pharmaceutical industry. So these kind of PSUs, they are there, and these PSU during the audit of the PSUs are generally being selected by the CAG and all. So if you will be part of those organizations which will have these kind of exposures or experience, then you will realize that this is such a practical situation. And then this is how important it is. This particular case study is going to give you some aspects around how the government companies are working, and when they are acquiring some other companies, then what are the various factors that we need to consider into account. Right, so these are the couple of things that we are going to cover in this particular case study. It will give you some glimpse about various service lines or domains in your terms. We will say of various examination uh, subjects, right? But so these subjects that right now you are a part of your study, they will become service lines in no time. Once you will be a qualified, they will be known as a service line. So each subject may go into diverse fields. They may get converted into multiple service lines after your qualification. So starting with the case study, which is the case study number 41. This is available in the ICAI's module. So there is a digest which is there available on the website. And I always recommend to go through those digests. There are various case studies from different industries, and it will give you a kind of an idea on what ICI's expectations are when you will be attempting this particular exam, how to write the solutions, how to handle these case studies. It's something that you will be going to learn when you will start going through these case studies. So we are talking about a PSU as a public sector unit of Government of India, Bharat Chemicals Pharma Limited. So we have BCPL as our PSU, for which the case study is there. So BCPL has served as a cornerstone of the Indian pharmaceutical industry since its inception. It means this PSU has been instrumental to the growth in the pharmaceutical industries. And how? So they are not directly into the pharmaceutical industry, they are a part of chemical industry, but they are producing those chemicals which are used by the pharmaceutical industries in their kind of businesses. So this is headquartered in Karnataka, in India. BCPL plays a pivotal role in the manufacturing high purity chemicals crucial for various pharmaceutical applications. It means they are into manufacturing of high purity chemicals, and these chemicals are then used by the pharmaceutical applications. BCPL takes immense pride in its unwavering commitment to quality. Now, if there is a company which is dealing with chemicals and producing some chemicals for the pharmaceutical companies, then commitment to quality is non-negotiable. To be very honest, quality is the only thing that can help you survive in, right? It's not only in the industry but also in the practice as well. So once you will be a qualified chartered accountant, and if you would like to start your practice, you know that active advertisement and doing the marketing of your practice is not something which is explicitly allowed. So there are regulations around those advertisement and marketing that we need to follow as a chartered accountant. And the reason is because we believe as an organization, we believe as an institute that our work, the quality of deliverables that we are delivering should actually be the biggest marketing tool for us. So the quality that we'll be producing, it will help us getting more work from the market, from the economy. So there is a very good saying which goes like that the good work, the reward of good work is more work. And that's what we believe in. So quality is something that we should, it is a kind of a non-negotiable. It is a fundamental to anything, whatever you are gonna do, be it in a job or be it in a practice. So like this only, BCBL is also committed to the quality. Their state-of-the-art manufacturing facilities are equipped with advanced technology and machinery. Stringent quality control measures are implemented throughout the production process, ensuring every batch of chemicals meets the highest standard of purity and consistency. So quality is not an instance. You cannot say like quality we delivered or we produced this particular batch with the highest level of the quality. Quality cannot be an accident. It cannot be a destination. You see, quality is a journey which will remain throughout there. So even if BCPL is producing one batch or they are producing 5,000 batches, all those batches should be quality compliant. They all should be standardized to that quality. And that's why whenever you purchase products of any brand, any company, you will realize that there is a equal same quality of products will be there. I mean, at times we are like surprised, but this is how the industries maintain this level of the quality. That if let us suppose you're talking about any franchisee in your neighborhood, be it let us suppose a quick service restaurant kind of a model or a fast food or a coffee franchisee, you won't you will be surprised to see that if, even if you're having this one coffee with one franchisee, let us suppose in Delhi NCR, you will get the same quality of the coffee, same taste of the coffee, even if you are having this with the same brand, maybe in some other state or in some other country. That's the level of the quality, and that's why that's how I'm telling you, or we are saying that quality cannot be an accident. It has to be there in everything that we do. So in the same manner, BCPL is also ensuring that all the production processes related to this, there are stringent quality control measures which are implemented, right? So be it even if it is procuring, processing, packaging, marketing, everywhere quality should be depicted, ensuring every batch of chemicals meets the highest standard of purity and consistency. This dedication to quality has not only positioned BCPL as a trusted supplier within the domestic market, but has also garnered them recognition as a reliable source for pharmaceutical chemicals on the international stage. So, with this kind of a mindset of unwavering commitment to the quality, BCPL is able to create a brand, that brand which is trusted not only by the domestic market but by the international market as well. So, this is we are just discussing some kind of a background about BCPA. It is more or less like if you are sitting in a meeting room, a client is sitting with you, then the first step for that meeting that you are having with the client, it is never about jumping to the problem or discussing about the solutions, right? Or discussing about the values that you can add to the existing solutions, which may be there in the mind of the client itself. That is never the first step. So you're never supposed to jump to the solutions. What is the first step? The first step is always to melt the ice, which is to bringing the confidence, to bringing the comfort in that meeting so that the client can open up. And this happens by asking the background, knowing more about the client, knowing about the business, knowing about the industry they are operating in. This is how you make your clients comfortable. So when we're talking about a case study is also not at all different from the practical environment that we are trying to discuss over here. So the initial couple of paragraphs in the case studies that you will be addressing, they are generally there to melt the ice, to give you that confidence, to give you that kind of a background knowledge of the client. Understanding the critical nature of their products for the pharmaceutical industry, BCPL prioritizes meeting the specific requirements of their clientele. They offer a comprehensive range of chemicals specifically tailored for pharmaceutical applications. These chemicals encompass a diverse spectrum including active pharmaceutical ingredients, active pharmaceutical ingredients, excipients, and solvents, all crucial for the safe and effective production of life-saving medications. So we have been just given some more knowledge about the company through this case study, and we are now aware that these chemicals which the company is producing, they are from a diverse spectrum and then they are very crucial to produce the life-saving medication. So this shows the importance of this particular company in the industry that they are operating in. Okay. Looking ahead, BCPL is dedicated to continuous innovation and technological advancements. They actively invest in research and development to refine their manufacturing processes and explore the creation of new high priority chemicals, catering to the evolving needs of the pharmaceutical industry. Furthermore, BCPL recognizes its social responsibility and strives to implement sustainable practices throughout its operations. So it's so they are obviously they want to kind of discuss about the continuation, innovation, and technological advancements. So they are actively investing in the research and the development to refine their manufacturing process, and simultaneously they know that for them this particular commitment to the sustainable practices throughout its operations. So they are committed to the social responsibilities as well. It means they are actively participating in the CSR activities. So what is happening? All these companies which are into the pharmaceutical or chemical production kind of a plants, what happens? They are supposed to invest in the CSR as well. Because of their operations, there is a high probability that because they are processing chemicals, they are trying to build certain chemicals, some compositions, which will be at the end of the day will be used in manufacturing or production of the life-saving medications. But these compositions may impact environment to some extent, right? And that's why these kind of companies, they are expected to invest some amount in social responsibilities as well. So BCPL is also not different because they are operating in this industry. So they are recognizing their social responsibilities and then they are striving to implement sustainable practices throughout its operations. Their commitment to a cleaner environment and responsible manufacturing processes ensures a brighter future for the communities they serve in as parts of business expansion strategy. Now you see, since BCPL is doing really good, so now they are planning to have a business expansion strategy. So BCPL is in the process of setting up a pharma intermediate business, which is at very initial stage. So now BCPL is thinking not only to have a chemical processing business, which the chemical composition they are creating is taken by as a base by the different pharmaceutical companies, but now they are also thinking of setting up a pharma intermediate business. So they are actually trying to expand that composition is something that we are already creating. So why not go to the next level? That let's start producing maybe medicines as well. Okay, so they are so once your business one line, one service line, one product line is fixed, then obviously anyone wants to grow. In the same manner, like when you will start your practice, you will fix one service line and then probably you would like to expand it to other service lines. So for this purpose, BCPL has acquired on 18th April. Now you see, when you are talking about the expansion of your business, so what happens? Either you will start something new by investing in the resources, or you will find out if in the industry that you are planning to expand your operations in, if there is anything that can be uh, taken or can be acquired. So if there is a company in that industry which can be acquired and then it can give you some, you can leverage on the resources of that particular company, then acquisition can become a very important strategy for any company who is planning to expand your operations. So BCPL also has acquired on 18th April 23 100% shares of BMD Limited. So there is another company which is known as BMD Limited that manufactures pharma intermediates. So the company has BCPL has invested or purchased 100% of those shares of the BMD Limited. The purchase consideration for the same was by way of a share exchange valued at rupees 70 crores. The fair value of BMDL's net assets was rupees 30 crores, but does not include. Remember? So there is an acquisition that has happened. In this acquisition, if we will talk about, it is like the 100% of the shares of the BMD has been taken and the compensation which is paid is 70 crores. So this is the exchange of share exchange value. So the shares that were issued, the BCPL's share that were issued, their market value is 70 crores. So, but the fair value of the assets of BMTL, so they are the net assets basically. This is because we are acquiring them. So we have done a fair value calculation and the assets fair value is around 30 crores. Apparently, it seems like the company has paid 40 crore rupees maybe for goodwill, maybe because of the brand value, because of the name of this particular BMD company which is there. But we will talk about it because the question says that it is not only the net assets which are there in the balance sheet or the financial statements, but there are a couple of more things as well, which may not be a part of the balance sheet right now, right? It can be the value around the customer database. It can be value of the patents, copyrights that the company may have taken. If there is any government license, the company is able to secure. So there can be multiple things. At times, some of them may not be part of the balance sheet as well because they are kind of non-recognizable assets. Okay. So we need to, when we are acquiring something, we need to be very careful that why are we paying extra premium? The extra premium is being paid as a goodwill to capture the brand name, or there are some assets as well which are not recognized in the books. So the question says that the net assets which are there in the books are 30 crores, but these are three, four more things which are not included in this 30 crores. Let's talk about them. So the first thing that is not part of the balance sheet is a patent which is owned by BMDL. So this company has owned a patent for an estimated successful intermediate drug that has a remaining life of 16 years. So there is a drug. Now they are able to, let us suppose, formalize one drug which can be essential to the, it is like life saving medicines. It may be a part of the life saving medicines. So BMW is BMDL, sorry. So they were able to secure a patent for this particular drug, and the remaining life of the patent is 16 years. A consultant, so you can say a consultant or a valuer, they have estimated the value of the patent to be rupees 20 crores. So they are saying if you would like to sell this patent today, the fair value can be close to 20 crores. However, the outcome of the clinical trials for the same are awaited. So the moment I am acquiring this particular company, they have a patent. This patent's right now current value is 20 crores. But there are some clinical trials which are awaited. The moment we'll be able to have those favorable results in our favor, the same patent can be sold in the market in 30 crore rupees. So maybe 10 crores is what can I can consider it as an asset, but this 10 crore of a difference is something which is a future thing, which is dependent on the results of the clinical trials. So I just cannot recognize it right now. So the patent, the fair value right now in the market, if I'm purchasing it as it is 20 crore. So that will become relevant for me. It's not like 30 crores. 30 crore तब तक नहीं होगा जब तक we will not have clinical results in our favor. Till the time, the moment I am acquiring it, मेरे लिए this is 20 crores only. BMDL, this is the second thing. So this was the first thing which is not in the books. The second thing is BMDL has developed and patented a new drug which has been approved for clinical use. The cost of developing the drug was 24 crores. So they have BMDL has actually developed another drug. This new drug, so clinically used now this new drug, the cost of developing is 24 crores. They have invested 24 crore rupees to develop this. But the early assessment of this particular drug that is developed, it seems like we can sell it in the market value at 40 crore rupees in the market. Now the point is I have invested 24 crore rupees to create a drug, and the market value of this particular drug is 40 crores. So company like BMDL definitely will go back to our company, the company who has acquired BCPL, and then they will say if you are acquiring our company, we have this particular drug already available and we can sell this in 40 crore rupees. So if you want to take it, the company along with this, obviously you have to pay for this as well. So the company, when they have paid 70 crores, they have definitely paid for this 40 crores as well, considering this 40 crores as well. The third thing that is happening is that BMDL's manufacturing facilities have received a favorable inspection by a government department. As a result of this, the company has been granted an exclusive 10-year license to manufacture and distribute a new vaccine. So you see there is a company now, right? BMDM, they have got a license to manufacture and distribute a new vaccine. So at times what happens, this license, securing this license also takes a lot of efforts. The company has to show the quality initiative that they have taken, right? From where they are procuring, how are they processing, how are they packaging, how is the whole distribution channel is working, how are they able to reach out to the end customer and generate profit. This all is what the company may have to present to the government to get the license. And when some company like for BMDL, they are able to secure this license. Okay, this is a 10-year license. So till 10 years they can control this particular the whole medicine that they are planning to get into. So this license will also have some market value, and we need to, as a valuer, we need to do that market value of the particular license as well. Although the license has no direct cost to the company, its directors believe that obtaining the license is a valuable asset which assures guaranteed sales, and the value for the same is estimated at 20 crore rupees. So they are saying it is 20 crore rupees. Perfect. After acquisition of BMDL, BCPL made a gross profit of 100 crores and incurred indirect expenses of 40 crores. So they have acquired BMDL. Now they have made a gross profit of 100 crores and indirect expenses are 40 crores. So net profit is around 60 crores. The market related details are as follows. So these are a couple of details related to the market. Risk-free rate of return in the market is 4.5%, right? So this keeps on changing. Generally, like in the practical environment, what we do, we consider the fixed deposit rate as the risk-free rate of return, which can nowadays can be somewhere around 6 to 7% as well. So these returns they keep on changing. The market rate of return is 12%. So let us suppose if you are investing in share market, just to give an example. So what is the rate in the market which is going? Because obviously there is some level of risk that you have taken. So if you are not taking any risk, market is responding with 4.5%. If you are taking some risk, which means the fluctuation can be there, then the market rate of return is 12%. Generally, when we are talking about as a professional about the market rate of return, we talk about the market rate of return from the same industry for the same industry. So when we are talking about the chemical manufacturing industry, we need to take the market rate of return of the chemical industry. Okay, it is not like the market or the share market you can start talking about. And then beta of the company BCPL. So if my industry is giving me, let us suppose 12% of the return, my industry standards can be different than the company standards. Even my company is working inside the same industry. That is known as beta. That how much the returns of the company will be responding towards the return of the market of the industry. So my industry is responding with 12%. My company's beta is 0.9. So just to give an example, if you multiply 12% to zero point 0.9, then you will get to know that this is how my company will respond. And I have issued 10 crore of shares. So there are a couple of things, couple of situations. It is always like discussing with a client. So when you are sitting with a client, like they will keep on hopping from one problem to another because there is so much going on in their mind. They will suddenly start discussions around the acquisition of a company, and suddenly they will start talking about the profits that they made, market value. Suddenly they will start talking about a GST uh, kind of an issue, or maybe something else. And that's why this meeting you have to be very attentive. You have to be very careful, and that's the same thing you need to do in your exam as well. You have to go through each and everything that is mentioned in the question very carefully. We highly recommend students while going through the case study, you are always supposed or advised to at least keep on making notes. Considering the time that is allotted to handle this particular IBS kind of an examination, it may become very challenging if you have to go through the question again and again, right, to find out the facts. So if you will come across, like we have discussed about acquisition of a company, now it apparently seems like that we are moving to the second thing, which is the indirect expenses, profits, returns. So it seems like this is the second portion, or I will say in the practical environment, this is the second problem of the client. So what I will do, I'll quickly make some notes of the first problem, and then I'll make some notes to the second problem as well. So that when I'll start addressing questions, I need not to go through the whole of the case study. It will help me saving a lot of time. So the moment I realize that this is the second part, I will start making some notes. Now the next session, it seems like this is another problem which is not directly relevant to the previous situations. So in the next situation, the company or the client is explaining to you like in connection with assessment proceedings under GST. So now they are saying that there is some problem with GST. So what has happened actually in the GST, the proper officer So there is a proper officer. They issued summons. There is a summon which is issued to the senior management officials of BCPL. So there is a senior official, Mr. Raj, and you know what has happened? The proper officer under GST, they have issued summons to the senior management. So what happens if there is a senior management? Senior management means it can be a CEO, it can be a CFO, it can be a managerial person, right? Who is part. So manager has a different meaning or a definition. Manager is not a manager which is there in the industry and the corporate. So manager has a different meaning under the Companies Act. So he is also covered under the senior management. Now the GST they have sent or summoned a senior management official, BCPL, Mr. Raj, after recording a brief of the proceedings in the case file and submitting it to the officer who had authorized the issuance of such summons. So let us suppose I'm an officer with GST and I want to summon someone. Okay, what will happen? I'll need to go to my senior. I need to make some notes, brief him about what is the proceedings which I want to go ahead and start doing, what level of or what kind of investment I want to do. So there is a briefing that I need to do to my senior to get the approval. Okay, so in the same case, what happened, the officer has actually recorded a brief of the proceedings that they are planning, and then he has went to his senior to get an approval to issue a summon. So they summoned, you know whom? A senior management official, Mr. Raj. Okay. Such summons in the 23 and 24. So what happens? You can only summon a senior official when your investigation. So initially you are just doing an investigation. When your investigations has actually resulted in a conclusion that the senior management official may have involved with that kind of a situation. If there is a situation which needs further investigation and then your assessment concludes that the senior management official may have been directly or indirectly involved, then only you are allowed to send the summons. It is not like you are briefing or you are recording the briefing of the proceedings you are planning to perform and then you can summon anyone. So, I mean, I'm pretty sure there will be a question around it, but just wanted to give you a background. The assessment order demanded payment of GST of rupees 20 crores along with interest against which BCPL went for appellate proceedings under GST. So what happened? After doing this particular proceedings and all, the GST team, they have demanded 20 crore rupees, including interest from the company, but BCPL has gone to the appellate proceeding for this. So now generally these kind of situations, we need to understand they are not the defined liability because there is a liability which is demanded by the department, but this is a kind of a disputed situation. I have went for further proceedings. I have applied to the appellate for further discussion. Now in this case, I need to see what is the probability whether I am going to lose the case, whether I am going to win the case. I need to understand the probability depending upon the assessment that the officer has made. And I may have to involve my legal team as well. That is why it is very important, and I generally recommend people that if you are part of business, you have to arrange for bail. Bail, that is BAIL, right? Any business without the right bail may be a failure. If not today, then maybe in couple of months or couple of years. What is bail now? Bail means B represents your banking partner. The banking partners, they have to be very solid. Your employees, your vendors, they actually don't care that whether your customers have paid you or they have not paid you, or whether your bank has approved your loan, or whether you are able to issue the shares or source some money. Your vendors, employees, etc. They are basically the short-term liabilities. So they don't care about whether you are getting the money from the debtors, etc. or not. So if your banking partners are not good, at times you may find as a company, you may be in a situation which is a little bit troublesome, and then you are not able to, I'll say, release the payment against those short-term liabilities. So your banking partner has to be very strong. So that is B in the game. The next step is A. When we are talking about the A further says that you have to have a very good accountant, a very good auditor, and a very good advisor. So A represents for any business accountant, auditor, and advisor. Accountant will record, will keep on presenting you MIS reportings, etc. so that you know. If you can't count it, you can't control it. So if accountant, a good accountant will be there, that accountant will keep on showing the MIS reporting, the numbers to the leadership, and the leadership will have a visibility that in which direction the business is going. So that's why you need a very good accountant. Then you need a very good auditor. So the accountant, whatever they are presenting, whether they are presenting the correct picture or not, is something somebody independently has to verify. And who does that job? The auditor. So it gives you a double assurance that whatever numbers they are coming to the leadership or they are going to the public, they all are audited by an independent person. And the third is basically advisor, your consultant, right? I will say your management consultants, they can be business consultants, strategical partners. I mean, there can be multiple people who are advising you, who are giving you consultancy. I, which is the next step in the BAIL, BAIL, I represents insurance. Any company without a right insurance may get into some level of trouble if anything goes which is beyond control of the company. So insurance gives you that kind of a security. It can be a very big succession plan as well. I mean, it can be a very important instrumental to your business continuity planning. At times, bigger the liabilities are so big at times that they may impact the existence of the company itself. Okay. So I is insurance and L is actually your legal. So like what I was trying to tell over here, in this particular situation, if somebody has demanded, so let us suppose the assessment order is there and there is a demand of 20 crore rupees. How do you know what is the possibility of this demand, whether this is probable, whether this is possible, or whether this is, I mean, not even having some level of assessments. Basically, it is a remote kind of a chances. So what are the chances? Are they probable? Are they possible? Are they remote? If they are remote chances, then you need not to do anything. That remote chances means the validation that the department has done, they are not doing a good validation. So there is a remote chance that the company has to pay anything. Then it will not be treated in the books in any manner. If there are possible chances, which is like that the company may have to pay this particular thing, right? But the chances are like 50-50 only. So we are not 100% sure, but it seems like the company may or may not have to pay this. Then this is known as the chances are possible. The moment the chances are possible, you have to recognize the contingent liability. So in the balance sheet, in your notes to accounts, there has to be a note on contingent liability explaining this particular situation. That the company has got a demand from GST and then they have applied to the appellate proceeding, and then what is the company's kind of a feeling depending on the situation, whether the company thinks that the decision will be in their favor and on what ground. So that is what you need to explain in the notes, because this is a contingent liability. But if it is now probable, which means the chances are higher, then you have to either recognize that as a provision or you have to recognize it as a liability, depending upon the certainty of the amount. Okay. So in this particular situation, the assessment order, they demanded payment of GST of 20 crores along with interest, and the company gets the order in its favor on 15th April. So now you see, company has applied to appellate proceedings and then they have got a favorable result as well. It means the demand is, I will say, it is rejected, right, on whatever ground, but the end result is that they need not to pay this 20 crore rupees. So there is a probability that for the financials 23-24, the company may have recorded this as a liability in the books or as a contingent liability in the books. Now on 15th April, they got to know that the result is in their favor and the financial statements for 23-24, they were still open when this particular order came, and the board of directors have signed them on 15th May. So The moment this order came, the company was aware that this 20 crore is something that they need not to pay. The management has not considered the effect of the transaction as the event is favorable to the company. The company's view is that favorable events after the reporting period should not be considered as it would hamper the realization concept of accounting. Okay. So company is thinking that since it is a favorable, so if I have recorded, let us suppose a continuing liability or liability of 20 crore rupees on the balance sheet date, then later on, if it is favorable before the signing, then probably this is an event which we should be taking to the next year. That's what company's opinion is. It means it is not an adjusting event. I should not adjust in the books. So as an auditor, you need to see whether this is an adjusting event or this is not a adjusting event. So if the conditions of this particular decision was existing on the date of balance sheet and subsequently there is some update, then as in this is a subsequent event, this is the adjusting event. Okay, irrespective whether it is favorable or it is going against you. So company is of an opinion that they have already recognized a contingent or a provision or a liability in the books. So they are of an opinion that since it is a favorable thing, they would like to be more conservative. Okay, that's a general trend. Even though I have rarely seen these kind of situations because management would always like to push you practically to increase the profitability, right? That's what managers' intention is always, management's intention. So if they will get a positive result, they'll always push to reverse that liability which they created on the balance sheet date, rather than the question with, this is practically I have rarely seen, I've not seen, to be very honest. So this is another thing. We started suddenly GST acquisition was there. Then we started moved to GST. We in between discussed about the profitability, etc. Now there is another fact. So there is the client sitting in front of me. I'm just thinking like I'm talking to the client, and client has another problem. Now they are facing another challenge, and this is in relation to the management has not considered. So we have already discussed this. Now what is happening? RK and Associate, an audit firm. There is an audit firm which is they have been entrusted with the task of auditing the IT department of BCPL. Mr. Rajesh Das, the engagement partner, will be leading the audit on behalf of RK and Associates. So there is a firm RK and Associates. So in BCPL, what we have done, we have appointed an RK and Associates. They are an auditing firm, but we have only appointed them for a particular work, not for auditing. I mean, not the statutory audit, I will say, but for auditing a particular section, that is the IT department only, right? So when we are talking about the IT department, remember when as an auditor you talk about the IT department, there are generally three things that we discuss. The first is known as the GCCs, okay? Or they are the general computer controls basically. So they are the overall the controls that are there in terms of the kind of a computer. How the server room is there, the restriction of the to the server is should be there, and all those things. These are the general controls around the computer. How the business continuity planning is there. What is the plan around the backup of the server? This all is general computer controls. So that's the one section. When you talk about IT department, the first thing you are doing is basically these general controls. Okay. The second thing is that you are doing now, you are talking about the automated controls. Okay. We call them maybe at times ITAC or whatever, the IT related automated controls. So when we are talking about IT related automated controls, then we check the logics in the system. So like if there is a automated control, to give you an example, like every month at the month end, we are doing a batch processing and the system is calculating the depreciation automatically. Okay. And then it is placing in different GLs. So it's very important to test those automated controls because as an auditor, you might not have any idea that what is the formula that is written in computer's language. It is known as logics. So what is the logic or the code that the system have been given? So that when I am running a particular command, when I'm doing a batch processing, the calculation of the depreciation is totally dependent on the it is dependent on the logic that is being feeded. So I'll definitely involve my IT department to test that logic. And it's not only testing that logic, but they will also like to see whether this logic is changed during the year or not. So ITech, when you are talking about IT automated control testing, we are also talking that the log testing is compulsory. So you cannot say like right now I have processed the depreciation and it is working fine. There is a possibility that during the year, this particular logic that is there in the system may have been changed multiple times. So for each ITech, you have to get a comfort on the changes that have been done during the year. So for that, you need to do the log file testing as well. First thing I told you, the GCC, General Computer Controls. Second, I'm talking about the ITEX, which is the IT related automated control. Third thing is known as IPEs. IPEs means information produced by entities. It means whatever information the client is giving you, whether that information is correct or not. If you are planning to do the audit, maybe the information you are getting from the client, that information itself is not correct. Then your all audit procedures, maybe they are not relevant or you have to revisit and redo all the audit procedures. Just to give an example, let us suppose you are asking for the debtors list. Okay, and the client has given you a debtors list, and let us suppose you have picked up some samples and then you have sent the confirmations, or maybe you have done subsequent testing and then you got a comfort that these debtors seems appropriate, and then you have done the testing documentation, everything is ready. But later on during the review it was noted that the information that the client shared, it was not complete. The IPE was not complete. Why it was not complete? Let us suppose when the client extracted the report, they forget to mention all the branches and everything that was there. So let us suppose there were 10 branches, 10 subsidiaries, but when they extracted the report, it was only for 9 branches. So what we need to see, we need to definitely see the logic that the company is feeding in, whether that logic is able to extract the complete report or not. That is known as IPE completeness testing. Until or unless your information is not complete that you have received from the client, you should not be doing any audit procedures over it. Okay. So the first thing that you need to do is after receiving IP is to quickly check it with the trial balance that these are matching with the trial balance numbers or not. Because at times it may happen, like let us suppose if you are expecting sub ledgers, debtors sub ledger, and the total is coming as 80. In your trial balance, there may be 100 as the total debtors are given. And when you will inquire, you may get to know that it is not like at a sub ledger. There is an accounting entry which is pasted or which is posted at the ledger level, not at a sub ledger level. So it means when you will extract the report for sub ledgers, you will only get the report of 80, not 100. The moment you will move to the ledger and you will extract the report at a ledger level, then you will get the report for 100. Okay, so when you will do IPs, there are two things that you need to test. First one is completeness, and then the other one is the accuracy. To summarize, when you are doing the testing of the auditing the IT department, there are three things: GCC testing, your ITech testing, automated controls, and the third one is your IP testing. That the report that the system is generating, whether they are complete and accurate or not. Okay, so there is an auditing firm, RK and Associate. BCPL has actually appointed them, but they have not appointed them to do the financial audit. Remember, they are just doing IT department's audit. Now, Mr. Rajesh Das, so this is the partner with this firm, RK and Associate. He will be leading the audit on behalf of RK and Associate. A checklist was handed over to him, which contained many questions such as. So what happened actually that a checklist was handed over to him. So this particular partner was appointed. This firm was appointed, and there is a partner, Mr. Rajesh, who is going to do the testing of the IT department. The company actually BCPL has given him a question checklist. So BCPL is not saying that you need to do the testing of the whole organization or the everything. They have given him a particular list that these are the 10 things that you need to test. So this may be a special purpose, or sometimes we can call it like it's a preview, or it is just like a special purpose testing that the particular company is getting it done by the RKM Associate. or maybe they are just want to see that whether they are compliant with the policies, with the procedures or not, or the policies the company has made, the system, the personals inside the company, whether they are following those policies or not. So when a company is getting some audit done to check whether they are compliant to the laws and regulations, to the policies that the company has built internally, to the expectations of the leadership and the management, then that audit can be known as compliance audit. So in this given situation, it seems like more or less they are going for a compliance audit. So the questions that they need to ask is like, are separate usernames and passwords assigned to individual users? Are periodical changes of the passwords they are ensured? Are external offsite data backups maintained at a place outside the premises? So you see all this I explained, they can be categorized either into GCC, this seems like more or less like GCCs, or ITEC or IPEs. So these are the questions. The checklist has been given to Mr. Rajesh Das by the company that please check it. Mr. Das assembled his audit team with the necessary expertise in IT auditing, then developed a detailed audit plan outlining the specific procedures to be performed, what will be the timeline, how many resources will be required. This is known as audit plan. So see, a detailed audit plan. Okay. This audit plan, this may explain nature, timing and extent as well. That what will be the nature of the procedures, right? So there are various procedures. We can do TOD, we can do analytics. I mean, this plan. So when we are talking about nature, we are talking about the procedures, what nature of procedures will be performed. Timing means what time they will be performed. Is there a defined frequency? We need to do it on quarterly basis, on annual basis, or like when we will be doing as an auditors in the audit plan. So if let us suppose it's an annual audit, whether we are going to do interim audit for 9 months one side and 3 months after that, or something sort of. So that timing of the procedures will also be mentioned. And then the E. E is basically extent. NTE. That's what we call it on audit. E is the extent. Extent means what will be the volume, level of operation. So if I'm doing the audit procedures, I mean how many samples will be tested and everything will be. So that will be the audit plan. Defining three things: nature, timing, and extent. And then who will be performing it? It means the team members need resources and their responsibility. Mr. Das explained to his team that in an automated environment, the data stored and processed in system can be used to get various insights into the way business operates. This data can be useful for operations, preparation of MIS, reports and electronic dashboards that gives a high level snapshot of business performance. I mentioned about an accountant when I discussed that these are the four. Bail is something the company has to arrange. So A, I told you accountant. You see all this MIS reporting, etc. This is very, very important. Nowadays, thanks to AI, artificial intelligence, machine learning, Power BI, dashboarding, etc., they can be easily automated. Okay, but still, to let us suppose create a dashboard, which is a interactive dashboard, which the maybe a dynamic dashboard I can say, which means that the moment the input is changing, the dynamic or dynamics of the dashboard or the dashboard itself is changing. So if I'm in the leadership, I may have a dynamic dashboard. So every time you are passing an accounting entry in the backend, that dashboard will keep on changing. Such a beautiful thing. I mean, rather than waiting for monthly, quarterly, or half yearly, I may have on a real time basis that what is going on in my business. But the point is, if I want to do that, I still need input files. So when somebody says like Power BI is very important, I do agree. Power BI may help you reducing the time that the management or the my accountant was taking in preparing that dashboard earlier. But still, it is not going to take away the accounting entries that we are posting or posting, sorry, in the books. Again, I took an example of depreciation analytical. So there may be some controls I will say that will be automated. I may define some certain logics, like I gave an example of depreciation, and then this can be automatically created every month. And those entries which can definitely be automated will be automated by the organization. And that's why AI, ML, and Power BI is taking up a bigger role with all these um, things as well. So just imagine if there is a different logic or a processing of information is happening differently. Let us suppose the grouping of the ledger is not correct. So if let us suppose I'm doing a segment reporting to my leadership through an MIS, but my system has picked up a wrong kind of an entry. So my system has been configured in such a manner that the Power BI dashboarding is actually picking up a wrong data, or maybe picking up a segment's data which is not relevant to that segment and showing it in a wrong segment. The whole of the dashboarding will be wrong. Okay, so there is a risk, and that's why the logic testing and all this how the things are processing that become very important. And that's why maybe BCPL kind of organizations, they ask somebody to come from outside and do an independent testing, or I will say compliance audit for the companies. Okay. uh, so while auditing BCPL's IT department, now Mr. Das, he stumbles upon an intriguing detail. He discovers information regarding a new pharma project recently commissioned near Bangalore. So now Mr. Das, when he is working on this particular thing, because this guy is from an audit background as well, not a pure IT hardcore guy. So he just noticed that what happened in one of the projects, a new pharma project, this project marked by a new technology and a hefty price tag of 1,000 crore. It's a very big project, a new pharma project that the company is running has apparently experienced delays and cost overrun. Okay, so there are delays which are happening in this particular project, and then there are cost overrun. It means they are surpassing the budgeted cost which was given by the management. Now, if these kind of situations are there, this information, though relevant to BCPL's overall operations, yes, very important, falls outside the specific scope of Mr. Dahas's assigned task, auditing the IT environment or department. So you see, he came across one information which he was not supposed to kind of cover in his routine procedures. So there is a checklist which is given to him that you are supposed to do these 10 testings and confirm us whether the company is compliant for these 10 things or not. But when you started doing the testing, you suddenly realized that it's not only these 10 things, but there is one thing which is one of the project is getting delayed, and then the overruns or the cost overruns are happening. So, Mr. Das, so for the aforesaid project BCPL, okay, so this particular project, there is a cost overrun which is happening. Uh, As an auditor, if I'll be doing this particular audit, I would definitely like to highlight this, especially if this is running any kind of penalties, etc. There is always a damages, liquidity damages, which is a very big amount of time in these kind of setups. And if there is a project that I have taken up and then I have committed that by this particular timeline I will deliver this thing, there is generally a clause around the liquidity damages that if you are not able to deliver this project by this particular date, this may impact the other company, the customer. Like it may impact their position in the market. It may impact their goodwill. It may uh, end up them losing a client or business to their competition. There can be XYZ thing that may happen. And that's why generally a liquidity damage kind of a clause is there. So one side we are overrunning the cost, which is we are crossing the budgeted cost. The second side we may have penalties, liquidity damages claimed by the customer, and that can become my contingent liability. Or depending upon how beautifully the contract was drafted, they may at times from becoming contingent liability instead of becoming contingent liability, they may become provisions for liability directly. So very important. Okay, so if I am doing the audit, I'll definitely like to discuss or at least highlight or bring to the notice of the management that this is what is happening. But for the aforesaid project, the BCPL has imported one machine from the US through a vessel named Last Tales. Okay, so this is the name of the vessel. I mean, not that relevant for us, but yes, they have imported a machine, which is an important thing. Now, the event relating to this entry into India and the discharge and onward movements and shortages are as follows. So what happened actually? These are the stages or steps or the dates with the different, I'll say, the movements that have happened to the vessel. So 24th June. What happened on 24th June? So there is a machine that I'm importing. On 24th June, vessel entered into the Indian territorial waters. Okay, they came into the Indian territorial waters. So it means they came inside the ocean which is allocated to India. India's ocean boundary. They came inside the ocean boundary. On 25th, they import manifest was delivered to the custom authorities. What is the import manifest? It is sending the information to the custom authorities. So they entered into the zone on 24th. On 25th, they send the manifest in which it is written that what is actually there on the ship, that how many, what nature of goods are there, what is actually there on the ship, who are the customers who have bought this, what is the value of this, and everything. That's a document around the ship which is being sent by the ship to the custom authorities. Okay, import manifest. It is sent to the customs so that they can give the clearance. They can allow to have the ship come near to the shore of India's boundary. 27 June, XML Limited filed bill of entry for the goods. Okay. Now, what is bill of entry? Bill of entry is basically when customer gets to know that the ship is there, ship has come around, then they claim that the goods, this machinery belongs to me. So they send a bill of entry to the customer saying that on this ship, this particular portion, this particular container, this particular machinery, that belongs to me, right? So I am claiming this. Please release this. And then on 29th, entry inward granted to the vessel. Entry inward means now the custom is kind of fine with their findings and everything, and then they have allowed the ship to uh, unload the goods on the port. Okay, this is basically they have granted the vessel entry. So these are the events. So ship came in the Indian territorial water. Import manifest was sent by the ship to the custom authorities, and then the client filed the bill of entry claiming that these are my goods. And finally, the custom has allowed to uh, unload the goods on the port. The rate of custom duty on such machinery was increased from 7% to 9% on 29 June. And now you see, 24th ship came, 25th manifest was there, 27th bill of entry was filed, but custom clearance was given on 29th. And by the time the custom clearance is given, the duty was changed. The custom duty earlier was 7%, but on this date, it got changed to 9%. Now the question will be there, definitely will be there, about whether 7% will be charged or 9% will be charged. Okay. So we need to see when was the final approval given by the custom authority. Until or unless custom has not given approval, nobody knows whether those goods will be deported on the Indian territory or not. The moment custom has given the clearance, then it will be considered as an import. And if it is considered as an import on 29th, then it will be assumed that the bill of the entry is filed on 29th only. It means that the custom duty will be charged as 9%. Yes, practically it happens like this. Then about this particular machinery which is being taken by the company, these are the details. So there is a cost of the machine which is $40,000. Transportation charges from the factory of the exporter to the port for the shipment. So you will need to visualize. Let us suppose this machinery is coming from USA. So in the factory, the cost was $40,000 of this particular machine. Then they loaded this on a truck or maybe on some other transport vehicle, and then they reached to the port to load this on the ship. Okay. So this transport charge is related to that thing, $2,000. Handling charges paid for loading the machine in the ship. So on the port, there must be somebody who is, like uploading or loading this particular ship on the machine on the ship. So $200 were paid by the company for that. Buying commission paid by the importer. So there might be somebody who facilitated this whole transaction, who was able to find the sellers, the machine quality, and everything. And this particular person was instrumental to this import. So we have paid some buying commission to this guy. freight charges from exporting country to India, right? These are the freight charges in between from USA to India. Insurance charges are not available. Charges for design and engineering work. So this machine was designed and some level of engineering work was done. So let us suppose I purchased a machine, but there is some level of customization that I needed to do, and I paid as a company $10,000 for that. So it happened outside India. And then there are unloading and handling charges paid at the place of import. So once I have received the goods, now I need to do the same thing at the port as well. So unloading charges will be there. Then I'll put this in a truck, will bring it to my factory, I'll install it. So all those things. So unloading and handling charges paid at the place of the import, and then transport charges from Mumbai to Karwar. So let us suppose this is where I wanted the machine. So 50,000 rupees was additional paid for transporting this. Exchange rate to be considered as $1 is 80 rupees. I mean, when I see this $1 is 80 rupees, it's crossing 94 rupees per dollar. I mean, obviously. So this is painful, but yes, for this particular question at least, we need to consider 80 rupees as the exchange rate. Okay, fine. So this is the case study. You see, in 3 to 4 pages of a case study, it's only 3 pages hardly, but we have taken significant amount to understand the whole of the scenario. We are doing this particular as a test or as a session, so we have that much of liberty, that much of time to go through this kind of a case study in so detail. And I tried to provide you some practical exposures to some practical pillars as well, and what we do when we actually handle these kind of situations in the practical environment. Okay, to give you better insights that from the industry how to handle these kind of situations. But my again humble request will be this level of or this amount of time is not something will be available to you. So every time the first time you are reading the case study, be very careful, keep making notes. Because all these questions at the end, they will be asked from the case studies only. And it is never advisable to go through the case study again and again or start reading that again and again because there are multiple case studies that you will have to handle during that particular inside that particular examination hall. We are moving to the now multiple choice questions, and then multiple after multiple choice questions we will handle the descriptive questions as well. So I have answers also ready for all of you, and I'll keep on explaining, even though what I believe that most of the questions I have answered then and there while explaining the case study itself. But let's see, okay, that what are the questions and then how we can solve them. So the first question is, what is a key factor contributing to BCPL's strategic positioning within the pharmaceutical industry? So BCPL, as the question mentioned, they are very famous. The brand is very good. They are domestically and internationally. They are able to create a name. They are able to create a brand. So what and how they have done that? First option is lack of innovation in manufacturing processes. I mean, obviously, nobody can do create a brand by having lack of innovation. Second says is stringent quality control measures. What I can recall, this is the exact word which was given in the case study as well. That they are focusing, highly focusing on the quality controls. Third one is limited range of chemical products. Again, this is not true. They have varieties of the chemical products. And the D is relying solely on the domestic market. I just mentioned that it is not the only domestic market, but it is also the international market that they are able to create a name in. Okay, so obviously, out of all the four options, what makes more sense is the B, which is the stringent quality measures. Okay, and then this is the reason behind it. But in the question, I believe it will not. I mean, explain the reasons. It's absolutely fine because it is a multiple choice question. But yes, this is another advantage when you'll do the practice at home. When you start going through the case studies, how to answer the case studies or how to think, how to bridge that gap which is there in your thinking that this is right and what is the expectation that the ICI has that what they want. your answer should look alike, right? There is a gap in both your expectations and ICI expectations. And by going through these IBS kind of sessions or doing the practice of the available case studies at home, you can help, this can help bridging that gap. So highly recommended. Moving to the second question. Second question says, choose the correct statement with respect to issue of summons to Mr. Raj by the proper officer. So if you can recall what happened, there is a proper officer who noted down briefings and sent it to the officer who approved a summons, right? I did explain that this is not possible. You just cannot summon a senior person from the company until or unless you have some direct or in one, you have some investigation and then there is a conclusion that there is some direct or indirect involvement of the senior official is there in the matter that is under investigation. Till then, you just cannot summon any senior official of the company. Okay, so we'll directly reach out to that option which says this. The first option says the officer issuing summons to Mr. Raj should have submitted a report to the officer who had authorized the issuance. So they are saying it is not like you should have noted a briefing. And it is like you have concluded and then you have submitted a report. Okay. It's not logical. I mean, we're not talking about here. What we are saying that you shouldn't have summoned to Mr. Raj itself. Summon to Mr. Raj should have been issued. No. This B cannot be the answer. Summons to Mr. Raj should not have been issued at the first instance. It can be the answer because Mr. Raj should have been summoned only when there are indications in the investigation of his involvement in the decision making process, which has led to the loss of revenue. Okay, so this seems like apparently the answer, and I told you the reason already. Mm. Moving out to the next thing, I'll keep on looking at the questions as well, if in case there is any. Okay, right now there are no questions. So the third multiple choice question that we have, choose the correct option relating to the receipt of the order under GST in the favor of the company. Okay, so there is a favorable result which came out of the appellate criminal's finding, and the management was of an opinion that it shouldn't be reversed because it is favorable. So they just wanted to be more conservative, which I mentioned that if we need to identify whether it is an adjusting event or it is not an adjusting event. If it is an adjusting event, then it means it has to be adjusted, whether positive or negative, doesn't matter. So let's see which option says this. A says such event is an adjusting event, providing evidence of a condition existing at the end of the reporting period. Further, such event, though favorable, needs to be considered as further relevant in the AS. This is the answer. Simple. That's what I explained to you. So all the other options, they are not logical in the given situation. Okay. The next multiple choice question, it says, how does BCPL demonstrate its commitment to sustainable practices in line with its strategical positioning? How are they showing it? By overlooking social responsibility in its operations. So we understood from the question that they are not overlooking social responsibilities, they are complying, and then they are simultaneously investing in the social areas as well. Through heavy reliance on harmful manufacturing processes, they are also not doing this. There is no heavy reliance on harmful manufacturing processes. By investing in research and development for technological advancements. Yes, right? So they are doing this as well, but question we need to read the again another answer. By implementing sustainable practices and ensuring environmental responsibility. So this is also there. This is important. So I mean they both are doing this because you see why I'm saying they are investing in research and development as well, because you see they are importing machines from outside and all those things are also happening. But what is more logical is basically they are implementing. sustainable practices which they mention and which ensures the environmental responsibility. So even though C and D both looks like they can be the correct answer, but then we need to think from the question perspective. What is more that the question is inclined towards. And over here as well, I answered that the new custom duty is what will be applicable, and I have given you the answer as well that even though the bill of entry was filed earlier than the custom clearance, but since the custom clearance was given on 29th, so it will be assumed that the bill of entry was filed on the clearance date, and that's why the revised duty, which is 9%, will be applicable in the given situation. Okay, great. Now we can move to the descriptive questions. In the descriptive questions, we have the first question. Explain the accounting treatment in respect of the transaction with respect to the acquisition of PMDL by BPCL under applicable Ind AS. Now you see, when BPCL acquired BMDL, what I can recall that they paid 70 crore rupees. So they issued some shares. The market value of those shares was 70 crore rupees. The company had at that stage 30 crores in their net assets. Okay. It means apparently question is trying to say that 40 crore is something that the company has paid for goodwill. Okay. Extra money was paid, a premium was paid. But then we had three things as an option which are not part of financial statements right now. But there is some market value which is associated to those rights as well. So they apparently seems like the intangible assets. Like for a company, to give an example, like for a company, they cannot record their self-generated goodwill in the books. It means, let us suppose I am running a company from last 5 years, 7 years, and I asked a valuer. So I asked the valuer and I asked them, can you please do the valuation of my company? And let us suppose the valuer came, they discussed about it is a one-man company or a, a lot of directors are there. Whatever, what is the operation, service lines, products, geographical presence, future plans. They discussed all this with me. And then they concluded that, I mean, for the company that you are a part of, the valuation of this company is 10 crore rupees. Okay. Now I realize that 10 crore is the total value of the business, but my net assets are 7 crores. I cannot say like this 7 crore is an intangible asset for me and I cannot pass an accounting entry just to give an example like goodwill account debit to my income, to other income. This is not allowed. This is not possible. But the moment I will try to sell this company, the situation is same. I am not able to recognize the goodwill in my books. But the moment somebody is buying this company, again the company's value will remain 10 crore only. I have net assets 3 crores only. So this company who is buying me, my company, will have to recognize 7 crores in their books because now they are paying for the goodwill. So you cannot book self-acquired goodwill in the books, but when you are making a payment, when you are purchasing a company, then you are purchasing a goodwill if in case, then you can recognize it. Okay. Now in this given situation, 70 crore is paid, 30 crore is what available as a net asset. But there are three more things. If I'll go back to those three things, they all three things have some market value. Okay. And it was the first problem the company was facing. Yes. So you see, there is a patent. Now the patent, the moment I am purchasing the company, the patent value is 20 crores. So I cannot say if the trials will come in my favor, it will be 30 crores. So I have not paid for 30 crores. Right now, this 20 crore is something that I'm interested in because this is realizable right now. If I'm selling the company right now, only 20 crore from the market will be realizable. I am not going to pay for the future. Maybe if the trials are not in my favor, there is a possibility the valuation of the market may get down to 10 crores or zero as well. So 20 crore is the value for this patent. BMDL has developed and patented a new drug which have been approved. So 24 crore was the cost, but I can sell this particular drug in 40 crore. So I can assume that 40 crore is the right now market value. So 20 crore I have purchased this. 40 crores is available, this 60 crore is this. And then the third one is basically that the license fees that we got is 20 crores. So 20 crores, this can also be considered. So what is happening? 20 crores, 40 crores, 60 crores, and then 20 crores is 80 crores plus 30 crores. See, 110 crores is something that I have acquired. I have paid 70 crores. So there is a 40 crore rupees of bargain purchase that has happened. Okay. So in the answer to the descriptive question, in the question number 6, you have to explain all this. Okay. Like what you will do with patent, what will you do with patent internally developed by BMDL, but 40 crore is something that you can fetch from the market. Grant of license to BMDL, obviously 20 crores, and there is no commitment or maybe conditions around this particular license or no liabilities attached. Otherwise, whatever I have got for this particular license, that could have been reduced, right? Be it if there is a grant, there is any condition which can reduce the value of this license, everything has to be adjusted. So in the given situation, you see fair value was 30 crores, patent is 60 crores, license is 20 crores. You will do the total, that's 110 crores. You paid 70 crores. Gain on bargain purchase is 40 crores. So it seems like there is a typo. Okay. But this should be 40 crores. So that's the descriptive part. Then we have another question in the descriptive one only. It says like being entrusted with the task of auditing the IT department of BCPL, Mr. Rajesh Das, the engagement partner, will be leading the audit on behalf of RK and Associates. Which type of audit IT department of BCPL is being conducted? Also distinguish such audit from other audit types by providing reasons for the same. Okay. So, I mean, we have discussed that there is a defined checklist which is given by the company to Mr. Das, and Mr. Das was required to test only those areas which are requested by the company, only those things. Okay. So, in this given situation, I told you this seems like we are checking the compliance of the company in relation to certain policies and procedures. So this is absolutely a compliance audit. Okay. It is not a financial audit. In the financial audit, we will be discussing the finances, the numbers, the balance sheet, the P&L and everything, but we are not doing this over here. So this is, in this particular case, this is a compliance audit. And then it is different than the proprietary audit, overall audit, financial audit. So you can definitely discuss and you can mention it in your answer. Okay. So it shows like that there is a focus on the IT controls and on the MIS reporting. So it is more or less like a compliance audit. Here is a breakdown of the reasons why a compliance audit is the most suitable option for this kind of a work that the company is doing. And then why it is there? Because we are focusing on the IT controls, we are focusing on the MIS reporting. Okay. What are the other types of audit? I did mention that it can be a comprehensive audit. Comprehensive audit is basically that we are not giving a particular area of the business, but we are asking to check the compliance on all areas. So it's not only the IT audit, it is clients, marketing, I mean, whatever other areas are there. Okay. So we can do that. If we are doing that, then it is a comprehensive audit. Then the proprietary audit is basically that we are doing a particular department or strategic decision making. We are talking about the strategies and then we are trying to get the do the impact assessment of those strategies. Then we are talking about the proprietary audit. So this type of the audit is directed towards an examination of management's decisions. Okay. So if you are asking for the overall policy and procedures compliances, then it is a comprehensive audit. If you are going for a section, it's simple compliance audit. If you're talking about the management decisions that are there, we are talking about proprietary audit or otherwise the financial audit, which we all are pretty much familiar about, right? So the numbers, the balance sheet, the financial statements basically. So conclusion, simple, because of these reasons, it is a compliance audit in the IT domain. The next problem the company was facing about the import of this thing. So what will be the accessible value basically? This is the question. Yes. So let's understand the question first. Determine the accessible value of the machinery imported by the BCPL. So accessible value is more or less like same how you capitalize an asset. So if you're capitalizing an asset, then that's a similar thing with only one difference, because you need to understand accessible value you are explaining for the import purpose. So when you are trying to capitalize an asset, you'll be capitalizing it till the time it will reach to your factory. Okay, then you will be capitalizing all the cost, even installation, etc. Everything will be there, and then you will be capitalizing it as a bundle to the plant and machinery account. But when you are not discussing about capitalization. You are discussing about the import value, so that the custom duty can be calculated. So to do the import value, all the expenses that you are spending after importing it, like transportation from the port to the factory or installation expenses at the factory, this all will be capitalized in the books, but this will not be used to assess the accessible value. I hope this is, a very simple explanation so you can understand. So in the given situation, all those expenses which are after your machine has reached to the port, they will by default be rejected, and any expenses which are not directly related to that particular machinery, right? They'll also be simply kind of rejected. Like to give an example, if there is a buying commission which you have given, it is not like related to the machine. It is related to the process of procurement, maybe identifying the seller and everything. So it is not that we will allow to capitalize, or it will not be taken in the accessible value, right? Or the insurance charges, if we are not able to assess them, the import, this custom department, they have a formula. They say that if in case it is not mentioned, it is 1.125% of the FOB that we need to take. What is FOB? It is free on board. And free on board means if I am importing something, understand, if there is a seller who is selling this machinery to me. So what is happening? This seller is putting my machinery onto the ship. The moment they will put it on the ship, the value till that stage is free on board. Now the seller can say that I have loaded the machine on the ship, all the expenses. So the value which is on that particular stage, till that particular stage, is free on board. So if the machine is 100 rupees, but I have taken 10 rupees extra for loading, unloading, making that machinery reach from the factory to the port, 10 rupees extra, this all will be clubbed, and then the total cost of the machinery till the stage it is uploaded, it is loaded on the ship, will become 100 plus 10 rupees, 110 rupees. And that will be my free on board. That this is what my value of free on board. Custom says if insurance is not available, you can take 1.125% of the FOP as the insurance. I told you the accessible value will be the value till the stage you imported or the clearance was given on the port. Till that stage, everything will be considered as your accessible value. Okay. So in that case, the insurance will also become a part. So free on board, after doing the free on board, what happened actually, we have paid for insurance. Okay. And then when it came, maybe some clearance, something, some sort of expenses, if there is any such expenses, it will all become a part of the accessible value. Okay. So capitalization and accessible value, both are different. Please don't confuse both of them. Okay. Capitalization can be a bigger amount, where accessible value is a smaller amount, because there are more expenses which can be capitalized over and above accessible value. So you see, I hope if the background is clear, price definitely it will come. Transport charges from, I told you to calculate FOB, you have to add these 2000 as well. Handling charges, it will definitely be there, 200 rupees. You have done some customization, which is done by a company outside India, $10,000. That will also become a part of the FOB, because it has been done before this has loaded to the ship. So the total after this is 52,200. Okay. Buying commission, I told you, it is not allowed. Not even when you do capitalization. It is a simple expense that you have to expense out in the P&L. You will not be capitalizing it in the books because it is not helping in any manner with the machinery increasing its value or useful life and XYZ. So it's not capitalized. It is an expense. It's an expense. You can directly take it in the P&L account. For the FOB value, it is 52,000. Now the freight charges up to India, I told you till the stage they will reach to my port. Okay. So freight charges up to India 4,000 will be added. Insurance charges not available 1.125% of the FOB. Okay. They will be added. Transport charge from Mumbai to Karwar. Okay. Very important, even though I have explained. From port to my factory. Now, port to my factory is a capitalized expenses. I will capitalize it, definitely. But it is not a part of accessible value because accessible value is a value on which I have to pay the custom. And it is the value till the time the assets are reaching to the port. So this transportation is not a part of it. Loading, unloading, handling charges paid at the place of importation, right? They will never be part of the this particular thing. So accessible value for us is 56,787, and these are in dollars basically. So 80 rupees is what the conversion. The question asked us to keep the conversion at 80 rupees. So 45, 42, 980 is the value of the accessible value for this plan and machinery. Let us suppose if the customer is getting charging 9% of the import duty, just to give you an example, giving you an example, then 45 plus that 9% is that what will become a part of the uh, total cost of the machinery, and whether that is depending on the nature of the machinery and the industry that we are working in, if that custom duty will be refundable or there is any way, then it will not become the part of the costing of the value, the capitalized value. But if you cannot claim it, it is a pure expense, then you can capitalize that as well along with your machinery. Okay. So this is how it is. Even when you write the answer, I mean, you need not to write all the notes and everything. This is just for your reference. So whatever I just discussed, this is the all the references given. But for you in the answer, if you'll be mentioning till here, I mean, this will be more than good, and then you will be assessed. Your answers will be your marks will be dependent on this solution. Okay, like at times you understand the client does not know why are you doing what are you doing. As a consultant, they believe in you. So when you're saying buying commission is not allowed, they are not going to get the explanation from you that why it is not allowed and all. Management is not someone who will be discussing all this. So in the same manner, you need not to explain everything to the ICI. I always tell this is very practical. I mean, whatever way you will be handling your client is actually the exact way you need to answer or to handle these case studies. Okay, so I hope it was fruitful, this kind of a discussion, and I'm really hoping that this is adding to some extent something good practically to your knowledge base. And with this, we have come to an end conclusion of the first case study. As discussed in the starting of the session itself, that we'll be covering two case studies today. One is already complete. The second is something that we'll be taking up in after a break. So the team, we may announce a break and we will come back after maybe 15-20 minutes. So let's keep it 8:25. Let's come back at 8:25. Okay. Thank you, team. Okay, एक second, just give me 1 second. दूसरे डिवाइस से भी लॉगिन करना है. Okay, so welcome back everyone. I'm just sharing my screen quickly. Okay, I hope my screen is visible. Okay, so the second case study that we discussed before break, that this is going to be the second case study. So this is about Indian Watches Private Limited. Even though this case study is again very small, I will say this is for the watch manufacturing companies, especially in the watch segment, the smart watch manufacturing companies. Now you see technology, when we talk about smart watches, technology is growing so rapidly that even when you have latest to latest technology in your hand, let us suppose there is a smart watch which just launched and then you are the first person who bought that smartwatch. The moment you are buying that watch, it is already outdated. This is the speed with which the technology market is growing. So if there is a company which is into the smart watches kind of a mechanism, there is a high probability they are sitting at a very high risk, right? So we'll discuss about this particular one company and then we will see how the smartwatch industry is working and then what are the various aspects that we as a professional, as a consultant, as an advisor, we need to come across when we are dealing with problems or customers or clients from this particular industry. Okay. So in the given case study, we have a customer, a client named as IWPL, manufactures smartwatches. IWPL had a turnover of over 560 crores. Okay, it's a big company now. It means they are making sales of more than 1 crore rupees every single day. It had outstanding loans or borrowings from banks up to rupees 80 crores in the preceding financial year. The paid up company of capital of the company is 20 crores. Okay, so borrowings 80 crores, paid up capital 20 crore and the turnover is 560 crore. Smartwatches. Now let's discuss something again. When you are meeting a client, the first step is remember it is melting the ice. It is never discussing the problem. It is never providing or discussing the solution. It is to understand the client. So we are doing the melting the ice. We are just getting or making the client comfortable. We are becoming comfortable with the industry, with the situation the client is actually in. So let's listen from client that what is the problem they are facing. Smartwatch requires a number of electronic components, lights, sensors, semiconductors, touchscreen, batteries, etc. So, and there is no doubt in it that smartwatches they are having multiple components in one smartwatch. Each smartwatch requires many types of these components in order to be fully functional, right? The level of obsolescence is high in these components due to constant technological progress and design changes. You see, this is very important. If you understand from the client perspective, so what is happening? If let us suppose I need a very simple example. Let us suppose I need the touch screen for my device. Now what happened? I have contacted somebody who, let us suppose a supplier, who is ready to supply the screen, the touch screen for my smartwatch. I have created a model, a module in my factory. I have set up a manufacturing hub, maybe a capability center, maybe I will say a particular unit or a function in my company which will be creating this kind of a smartwatch. I started manufacturing the smartwatch to get the economy of scale, to get the benefit out of it. I ordered the screen with the size of the smartwatch in bulk so that I can take the advantage. I can have economies of scale because when I'm buying in bulk, my the per unit cost will be reduced. Everyone is aware about it. But you know, in couple of months, so let us suppose I have bought the uh, touch screen for, let us suppose, for 6 months of the capabilities of my manufacturing capability. But after a month, I realized that this particular watch or the style of the watch is not acceptable, or the market is evolving, and then we have to make a different kind of a watch. Now, if we are going into that kind of a situation, you see all the stock that is there in my stores, right? There is a high probability that will become technically obsolete, right? And this is the problem the company is facing. So the level of obsolescence is very high. Recently, what has happened during a management review meeting? So, there is a periodic review meeting which always keeps on happening. So, in the corporate environment, if you see, it's not only the auditors which are meeting the management, there is an internal meeting. Every day there is a meeting, right? Then the management meetings are separate. The people who are executing their meetings are separate. Then the board of directors meeting which is happening every 3 months, and I mean so many meetings are going on. So the last management review meeting where the management had a discussion with various, I will say, stakeholders to understand which direction we are going. And let us suppose there is an MIS report which is presented by my accountant, and the management is actually, all the heads of different departments. They are sitting together and we are discussing about the progress, and then we are trying to address some challenges. So what happened in this management review meeting? The production manager. So there is a production manager. Now he's speaking in the meeting. Just visualize how a corporate meeting is getting conducted. Manager is complaining. He's complaining about the delay in the assembly line activities. Okay, electronic components from the store departments were not being supplied on time at the assembly line. Okay, so they have created an assembly line. So what is happening on the assembly line? They want the components, different components, sensors, semiconductors, touch screens, batteries, all those things, and then they are making a smartwatch at the assembly line. But what is happening? The production manager, who is the in charge for the assembly line, he has a complaint. He's complaining. Listen, we are not getting the components on time, and this is definitely impacting our efficiency in the assembly line. Now when a production manager is complaining that the assembly line is not able to deliver or provide the components on time, the management will definitely move towards the head of the, I will say, the store, because the store is not able to provide it. So let us suppose if you are the manager or the management team, you will reach out to the second person, the head of stores and spares, and then you will check what is happening. So the production manager has complained. Now we are moving to the storeroom manager, and we are asking, hey, what is the reason? Why you are not able to provide this? Why there is a delay in obviously issuing the product to the assembly line? Now storeroom has his own explanation. So he is explaining that the delay was primarily caused because of fast obsolescence of the component. So he is saying the components are getting obsoleted very fast, and because of this there is a delay. How? There has been an inventory pile up of such obsolete components. So he is saying that I have a storage, there is a limited room, the storage room that I have, and then in that room, what is happening? There is a lot of inventory which is getting piled up because we are buying things in bulk to get economy of scale, and these things that we are buying, the components we are buying, they are getting outdated or technically obsolete. The conclusion is basically that in the storeroom, just imagine a storeroom, there's a lot of stock that is there, but most of them is not used by the production department. And since I have limited storage facility, I mean, I'm struggling to reach out to the right component that is required by the assembly line, and it is taking extra time to deliver this. So this is the store manager's complaint. So he's saying there has been an inventory pileup of such obsolete components, many of which were bought in bulk, you know, because the economy of scale is something that company must be targeting, but could not be used smartwatch as there had been a technological design change of the component in the meantime. Over the years, these items have accumulated and have started taking up substantial place within the storage area of the component. Due to this, retrieval of components that are currently usable is taking time, and hence the delay in delivering components to the assembly line. So very practical. I mean, this is exactly what I explained. Now, production of smartwatches happen in large scales. So we discuss about two people over here. One is the production, the other we talk about the storeroom. There is another very important a kind of a person which is ensuring the quality. Okay, and then once you have a product which is absolutely amazing, let us suppose your procurement team is really working good, your storeroom is really working good, so procurement is happening amazingly, storeroom is really able to provide you efficiency, the production manager is able to ensure that the assembly availability and the production efficiency is right intact there, the quality department is able to ensure that the quality is there, and then you have a product which is market ready. Then it comes to your clients and market departments. How are they advertising? How are they promoting? How are they, or what are the channels or distribution channels, etc. What is the supply chain management through which they will be doing? Whether they want to enter into B2B, B2C, they want to do offline sales, online sales. I mean, there is a lot which is going on. And for each sub department that I just explained, you may have a strategy in place. That how, let us suppose procurement department, how to get the best products at the lowest prices. So that's a efficiency that the procurement department has been given a target to achieve. Same way, storage department has been given a target, production has been given a target, and all these targets are at times they are related, interrelated to each other. Okay. Production of smartwatches happen in large scale and is considered a high volume business. The company is using total productive maintenance for maintaining and improving its production process. TPM. TPM is a very well known a kind of a model which is used by the manufacturing businesses to control various types of losses. We will discuss about the TPM in detail because this question explains TPM. I mean, this case study is all about around total productive management TPM. So we'll discuss it in detail. For maintaining and improving its production process, the production per day is 5,000 watches. Right now, we are planning to have 5,000 watches each day. The smart watches are manufactured using several automated machines, obviously. So there are multiple automated machines which are in place, and then according using those automated machines, we are preparing smart watches. Now, since we are discussing about the various automated machines, we are discussing now the one of the processes in assembly uses an automated machine that requires 4 seconds per watch. Okay, so we are discussing about one process to see whether they are what is the level of efficiency that we are sitting at. So we are saying that one process is taking 4 seconds per watch. Okay, we have 5,000 watches, so we can easily multiply 5,000 into 4 seconds. It means 20,000 seconds. Divide by 60, whatever it is, 330 or something hours. It means to have these 5,000 watches, we can deliver this in 300 hours. Okay, something sort of. Okay, the machine is operated on an 8-hour shift basis. So they are working with 8-hour shift. In addition, during each shift, the machine has a 60 minutes break period and a 20 minutes cleanup period. It means 60 plus 20 is how much? 80 minutes. They are being uh, planned for these 8 hours. These 80 minutes the machine will not be available. Unplanned downtime. Now this is abnormal. Why an unplanned is abnormal? Because this is not in the planning. This is not the standard. So what is happening? Maybe other companies in my industry, they might not be facing this. And if they are not facing this 20 minutes of an average downtime, then they can manufacture more kind of watches in this 20 minutes, which means their per watch cost will be lower than my per watch cost, which means they can introduce the product at a lower price in the market, maintaining the same margin of profit than I am maintaining, and it will push me out of the market. Okay. So this unplanned downtime is always very risky, but the company is facing on an average 20 minutes of downtime, unplanned downtime for machine per shift. Out of the 5,000 watches that undergo this assembly process each day, 95 watches are not assembled properly. So these are considered defective units. So now you see, this is also, we need to see what is the industry standard. If in the industry that I am operating in, if this ratio is something that I am sitting at higher than the industry, then again this is an unplanned or I'll say an abnormal loss, which is again it can push me out of the market because if let us suppose in my competition only 50 watches are not assembled properly, it means their quality ratio is much higher, right? So it means their per unit cost will be lower because if I am manufacturing 5,000 watches and rejecting 100 watches, and somebody is manufacturing 5,000 watches with, let us suppose 50 watches as rejection, then obviously my cost will be higher. So these are considered defective units. So what we have discussed actually, we have discussed about the availability of the machine that 8 hours of the shift it is available, but 60 and 20 minutes are planned and 20 minutes are unplanned. So they are not there. So it means unplanned means it is going to impact the productivity of my machine, right? Or availability of my machine, I will say. Out of 5,095, this is absolutely my quality which is getting impacted here. This all is discussed under the TPM, total productive maintenance. I'll take it up, quickly, once we will go through the case study. Now this IEWPL has decided to increase its production capacity to 20,000 watches per day. Now you see, they are sitting at 5,000 watches as a capability right now. They want to increase it to 20,000 watches per day. For this purpose, it imported an equipment from USA. So they are importing something from USA. The price for that machine or equipment is $1 lakh. The date of entering into the contract was 30th April. The date of actual importation was May 25th. So what happened? The company ordered something on April 30th, contracted something on April 30th, but they are able to import it on May 25th. On the date, the price of the equipment increased to $1,10,000. So on May 25th, it was increased. But point is, we got into a deal which was earlier than this particular moment. So we will definitely be able to secure this particular product at $1 lakh only. However, IWPL had already settled the contract by paying $1 lakh to the exporter on April 30th. So you see, just because there was an increase in the price, there is no additional liability that came to the company because company was good or smart enough to make the payment on the contract date itself. Post importation, IWPL has further agreed to pay 20,000 as license fees and service fees for the equipment to the exporter in the USA. This is part of the condition for the sale. Okay, so you see, this is again 20,000 is paid, and this 20,000 was the part of the sale. It was a condition of the sale that pay me $1 lakh right now, and then I will pay you, or you will pay me $20,000 once you will receive this in India. So the company sorted it out in let us suppose $1,20,000. While if they would have purchased it on May 25th, it would have costed them 1,10,000 plus 20,000, 1,30,000 rupees dollars. Simultaneously, there is a very important factor which is they made the payment on April 30th. If they would have not made the payment on April 30th, but if they let us suppose they would have agreed on the price, which is $1 lakh on 30th April, then there would have been a very, very um high chance then that there would have been some kind of foreign exchange loss also. If the rupee have depleted or the dollar would have become more stronger, then the company would have ended up paying higher than what they have paid in the given situation. And to avoid these kind of instances only, there is a hedging that happens. There are forward contracts that the companies generally get into. They do definitely pay this premium on these forward contracts. But if the dollar movement, unfavorable movement in the dollar or the exchange rate is higher than the premium, the company can definitely benefit out of it, right? So this is actually a very practical scenario that this happens. IWPL imported sensors from watches that is based in USA. Now IWPL, since they have multiple components of a watch that they keep on buying from the different I will say vendors. There is a vendor known as Watches Inc, which is based in USA, and Watches Inc is sending sensors to IWPL. These sensors are assembled into onto the circuit boards of the smartwatches and form a core component of the watch. So these sensors are a core component of my watch. Watches Inc holds 4% of the equity share capital of IWPL. Now watches, they are holding 4% of the equity share. But see, this 4% is very nominal. I'll say this 4% will be only considered as an investment in the books of the Watches INC. It is not an associate, it is not a subsidiary, it's not an wholly owned subsidiary. So consolidation will not be happening. It is just like an investment which will be there and which will be done at a kind of a fair value, uh, right? So depending upon the situation. So these sensors, this 4% is basically an investment in the books of watches, INC. Each sensor is imported at $10. Subsequently, following IWPL's plan to increase its production capacity from 5,000 to 20,000. So now IWPL must have, so just imagine again a very practical situation. They must have called Watches INC and then they must have negotiated the price. They were like, we are buying right now 5,000 watches, but we are interested in increasing the capacity to 20,000 watches. So we will need 20,000 sensors. And now there is a huge volume that is coming to you, so you have to uh, reduce the prices. Now the watches they have reduced the price to $8 from $10. But the problem is when imports at the reduced price was affected, the department rejected the transaction value, stating that the price was influenced by relationship between the said parties. It completed its assessment based on the earlier import price of $10 per unit of sensor. So department has a different opinion. They are saying, listen, this import is happening and let us suppose we want import duty. So we will not be asking import duty on $8, right? We will be asking it at a $10. The reason is because the price has not been decreased because of the volume increase in volume, but it has been reduced to take the advantage of the given situation because there are two companies which are related to each other. Okay, so the department is of an opinion. Okay, yeah, department's opinion, and that's why people need advisors, consultants like us, like chartered accountants. And the reason is because now if IWPL are there, just imagine $2 per unit, 20,000 watches, and then the the taxation over that. So there is definitely a good amount that IWPL will end up paying if department will not agree, right? Unit until last year, IWPL was collaborating with OSoft Private Limited. So you see, again, I'm telling you, there are multiple situations that the client will keep on explaining when you will sit with the client. So in our given situation, the client has told us about the TPM. They are using this TPM kind of a model to bring the efficiency of the in the production line. There is a challenge which the production or assembly team was facing, the storage manager was facing, right? And then there was some downtime, some quality related, I will say, impacts which were being shown. We have also been told about a machinery that had been purchased for $1 lakh. I mean, there is another instance that happened that the investor, one of the investors in my company who owns 4% of my shares, they are the suppliers of a sensor. They have reduced the price, which department is not agreeing. There is another situation that the client is telling you. What is that situation? So the client is telling you, until last year, IWPL was collaborating with OSoft Private Limited. There is another company, and they were kind of a partner. They were collaborating with each other for its software requirements that are installed within the smartwatch. So you see, they are getting the uh, sensors from Watches INC, but now even if the hardware of the watch is ready, they need the software. So they have collaborated with OSoft for the software. During the interactions, when they were discussing with the OSOFT, the management at IWPL noticed the talented pool of software engineers. So they got impressed. There is an impressive team that the OSOFT is having. The management at ITBL noticed the talented pool who were able to provide unique software applications. Therefore, after a few rounds of negotiation, IWPL recently acquired OSPL for 20 crores. Now this is amazing. So they were actually getting supplied by one company with this particular software. Now they have acquired that company. So what happened actually? They acquired a vendor. It means it's a backward integration. Okay. So this 20 crore, these operations of OSPL will continue as before. All the software developed by OSPL will be used exclusively in the smartwatches. So now what happened? This OSPL, since it was manufacturing softwares for IWPL, there was a little bit, but there was a chance, right? Since they are talented people, they could have sold this particular softwares or these kind of softwares by little bit of changes of customization to other watch companies as well. It means they could have feeded to the competition of IWPL. So IWPL took a smart move and then they acquired the OSPL only so that all the technology that the OSPL is developing, it can only be sold to IWPL, not to the open market or to the competition. And then they have paid 20 crores for that. The operations of the OSPL will continue as before. All the software developed by OSPL will be used exclusively in smartwatches manufactured by IWPL. No supply to competition. Okay. These applications that can increase the efficiency and utility of its smartwatches. Recently, the software engineering team that integrated with IWPL developed a navigation application that helps the user navigate required routes as well as suggest alternate routes to avoid traffic. The smartwatch series that included the navigation application saw a spurt in sales due to this feature, giving IWPL a competitive advantage over its rivals. So you see, by investing this 20 crore rupees, and acquiring the whole OSoft company, they acquired the talented pool of software engineers along with. And with the help of those talented software engineers, they created an application, a navigation application like Google Map, etc., which is getting very famous into the users. So users are finding it very user friendly or efficient, the effective or efficient. So they are using this application, and that's how the IWPL is able to create a competitive advantage over its rivals. So this is the case study basically. So if I'll summarize the case study, then the case study is giving you couple of situations. First of all, the company has given you the client has told you that 560 crore is the turnover, and then in the preceding financials, it had outstanding loans or borrowings from the banks up to 80 crores. In the preceding financials, the paid up capital of the company is 20 crores. Just give me 1 second only. Okay, so this is the basically the turnover of the company and the loans and the capital of the company. The second thing was some problems in the production in the assembly line and the storeroom manager. Then we have production of smart watches happens in large scale and is considered a high volume business, right? So this is like the capacity, current capacity of 5,000, and then how much time and everything it takes, what is the quality ratio, everything. Over here, we have purchased another a kind of a machine, and because we are planning to increase our capacity from 5,000 to 20,000 watches. This para, it all says that the price of the sensor was reduced by my importer because of the volume increase. But the department is saying no, this is not a volume increase, this is a relationship. So you guys are related, and that's why the price has been reduced so that the import duty can be reduced on these products. And then the next is basically a OSoft company. A software was there, and this This company was acquired by the by our company, and they were able to create another software which is giving some good level of edges, I mean, over the competition. So this is the case study. Let's move to the multiple choice questions and see what is happening there. So in the first part, which of the following techniques may be useful in resolving the problem of delay in delivery of components from the store to the assembly line? Okay, good question. This question is about, so the store manager explained that there is a lot of stock which is getting piled up in the storeroom because of the technical obsolescences. So this product, this particular I'll say stock cannot be used in the assembly line, in the production line. But because this stock is there in the storeroom, I am finding it difficult to reach out to the right stock, which we need to send to the assembly line to increase the production or to speed up the production, I will say. So question is giving you four options. They are saying which one option can help you solving this. Okay. The first option is basically economic order quantity. What is EOQ? EOQ says that what should be the amount or the volume in which you should be ordering your goods to reduce or to optimize your ordering and storage cost. Okay. So this, if you will do the economic order quantity, you will get to know that what is the volume in which you need to order so that your storage and your ordering cost can be reduced. This is the economic order quantity. Second is 5S methodology. This this actually tells you, 5S methodology tells you how you can handle your stock. So you have to handle your stock by sorting it out, by storing it rightfully, like, storing it in a sustainable manner, in a systematic manner. This is the 5S methodology. It's a Japanese technology, or I'll say a methodology on how you store the uh, your stock so that you can extract the stock in the speeding up manner. Just in time production. Just in time production says that you need not to maintain any stock at all. You can do the production as and when a customer requests it. Cellular manufacturing is basically creating a small hubs or the center of excellence. Like when it comes to assembly, we can create smaller hubs. Like one team will only be focusing on, let us suppose, putting the touch screen, installing the touch screen. One can be installing the softwares, the other one can be installing the sensors. This is basically cellular manufacturing. So as discussed, EOQ, the what is the order you need to do. 5S is how to sort the stock. Just in time is basically manufacturing against the orders that you are receiving from the customer. Cellular manufacturing is creating the center of excellences. So the question is asking that which one technique will be useful to resolving the problem of delay in delivery of components. So problem of delay is happening because the store is not able to sort or stock the stock which is there in the right manner. So the answer is 5S methodology. So how to store your stock is something which is told by the Japanese methodology, which is known as 5S. I'll quickly jump to the answer, and the answer is 5S methodology. Okay, so this is which is a Japanese methodology. It tells that you need to sort the stock, you need to set them in order, shine it, standardize it, and then sustain it. Okay, so if you will follow these 5 steps, then the stock, at least handling stock, will become easy, comparatively easy. Second says, by improving the process for timely availability of the electronic components to the assembly line. So if we will improve with 5S, we will push it to the assembly line will be able to get it faster to the assembly line. Which of the components of overall equipment effectiveness, OEE? So we just discussed about the total productive management, TPM. OEE is managed through TPM. So company is following TPM, and that's why they are saying which one component of the overall effective equipment effectiveness will be impacted. So they are saying the store can speed up the supply or delivery from store to the assembly line. which one component of the OEE will be impacted through this? Availability of the machine. Just because you are, I mean, kind of speeding up the storage to assembly line, this will not increase the availability of the machine, right? Availability of the machine is intact. It is irrespective whether the stock, how much time stock is taking. But the performance of machine can definitely be increased. Again, quality losses, they are not linked to the delay in the material. And obviously cost of machine is also not dependent on the delay in the material. The performance of machine can change. Okay. So the OEE's impact will be there on the performance of machine. I'll quickly show you, I have just extracted a image for you guys so that you will have better idea what is a TPM. I hope my screen is visible to you all. So this is known as TPM basically, right? So total productive maintenance, it has three components. So it shows basically, like for a machine or in a manufacturing department, how things are being controlled, how the losses can be reduced. Okay. This shows like total productive management. It maintenance, it has three components: the availability of the machines, the performance of the machines, and the quality of the machine. Okay. Now what it says that there are six big losses, which is to mention, which is the six big losses in the TPM. And as a manufacturing unit, you need to control these six big losses. These six big losses are again categorized into three categories or components. Those three components are availability. So these two losses will impact the availability. These two losses will impact the performance. These two losses will impact the quality. So what is impacting the availability? Your equipment's breakdown, right? So if equipments are breaking down in between, this is going to impact your availability. Simultaneously, how much time it takes to set up, right, your machine, how much fast it can do the processing, how much time it takes to adjust those machines, everything comes under availability. So availability have two components: breakdowns and setups. Then the performance, the machine may be impacted by idling or minor stops. Okay, just to give an example, like the uh, store was not able to supply the stock on time to the assembly line. So obviously some minor stops or some idle time will be there. It means it is impacting the performance of the machine, or the reduced speed, that is also impacting the performance. So the machine is working throughout. It is not like the machine is stopping because of the delay from the store. But the problem is the machine is not working with the right speed. So let us suppose the machine can produce, just to give an example, like 60 watches in 1 hour, but the reduced speed is there and we are able to only produce 50 watches. Then the quality, process defects, scrap or rework generated during the stable production, or the startups or yield losses, right? So there are some losses which are happening as soon as we are starting up, or like those kind of situations are there. So this is known as the total productive maintenance. Okay, availability, performance, quality, and these are the six big losses. Perfect. Coming back to our case study. So when this is asking that OEE in the TPM is getting impacted, then the answer is performance of machines. Just a minute. The third question is basically, which of the following will hold true for IWPL as per the provisions of the Companies Act? So in the Companies Act, we need to understand that what is allowed. So in this given situation scenario, team, am I audible? Because I have logged out from the second device, so I'm just quickly checking. Okay, perfect. I thought I just perfect. So as per the Companies Act, what are the statements which are true? So the first one is, by the Articles of Association, IWPL can appoint its founder, Mr. Lal, as its managing director for life. So this is not allowed. As you know, in the companies like the maximum tenure can be 5 years for which you can appoint somebody. So this is not allowed. IWPL has to have a whole-time company secretary since it has paid up share capital of 20 crores. This is true because if you have more than 10 crore rupees of capital, you have to have a whole-time company secretary. IWPL has to appoint, is required to appoint an internal audit as well, mandatorily conducting an internal audit. This is also true because it is more than 100 crore in the total turnover. IWPL is required to appoint independent directors on their board with the view to boost the level of corporate governance. No, they are not supposed to appoint the independent directors because they are not listed companies. So over here you see in the third, it seems like second and third is the right answers, and then the C will become the correct answer. You see, so this is the correct answer. So option 2 says that if you have 10 crore rupees of share capital or more, then you have to have a company secretary which is appointed there. And option third says that if the company is having a turnover of 200 crores or more in the preceding year, then they have to have a kind of internal audit department. So now you see 560 crores was the total turnover, so they have to have an internal auditor. So they need to appoint an internal auditor. Okay. And this is basically mandatory, but if you want to have a recommendatory kind of a thing, that is your choice. I mean, company can anytime have internal audit for their benefits because it is going to obviously help improving the operational excellence, bringing the operational excellence for the company. So depends upon them. Fourth, so there is a acquisition that happened. OSPL was acquired by IWPL. I told you OSPL was the was supplying the software. So for us, OSPL was a vendor. So we went back one step to acquire someone. That's why it is backward integration. Okay. So the fourth answer is backward integration. Fifth is basically if it is found that the navigation tool incorporated in the smartwatch is not user friendly. Let us suppose the tool, there is a software that was developed by this new company, and this was a navigation software, and market responded pretty favorable for that particular software. But if it would have gone negative, right, and if it would have not been user friendly or too complex to operate, which attribute of the Kano model will the aspect to the complexity in usage fall under? So Kano model is basically shows about the customer satisfaction and all. So it shows like if for a product, the Kano model tells that there you need to identify the attributes or the features of your product which falls under various categories. So it says what are the features that the customers for the customer it's non-negotiable. What are the features of let us suppose a smartwatch that the customer is neutral all around? What are the features of your product, let us suppose smartwatch, which is motivators for the customer? I mean, which what is that customer is appreciating in the market? Okay, and then what is the reverse quality? What are the things which are going against? It is not even neutral. It is not even positive. It is not motivators. It is creating a negative impact. The customers are not at all happy and it's creating a negative impact. So that is known as Kano model. You need to divide the whole features of your products into these categories. I'll quickly show you the Kano model as well. I mean, I found it pretty good model when I came across. So you see, these are the 5 categories in which you need to feature your products details. So must be these are non-negotiable. It has to be there. Performance, which the customer feels like they are being used by the customer for the performance and all. Delighters, customer is really happy, really excited. They're talking. It becomes the talk of the town. Let us suppose this navigation thing that right now people are talking. So it may be a delighter because it is exciting for people, and then they are talking to others. Indifferent means there is a feature which is indifferent. People are not able to kind of differentiate it. Let us suppose I have a smart watch with a stopwatch or maybe alarm clock. So I mean this is what is there in every smartwatch. So when we buy a smartwatch, it is by default that it has to be there, right? Like when I'm using a smartwatch, I mean At times, one of the features that I was really happy about, and it becomes a delight or excitement, that when, let us suppose, I have to go for a run or a walk, I never carry my mobile phone with me. So it's just like the maybe my AirPods and the watch that I'm carrying, and you know, if there is somebody who's calling me, or whatever is notifications are coming, they can directly come on my watch. So it becomes, I mean, kind of a delighter for me that I need not to carry my mobile every time I'm going out of my home. Okay. Then there are something which is indifferent. There are something which are reverse. I mean, they are just creating a negative impression. So if this navigation tool has gone negative in the market, then it would have created a reverse quality. The people might have started talking negative about this particular watch. That don't buy this watch. This watch has this problem. Okay. Then the next thing is calculate the following. Okay, we were discussing about the TPM model. In the TPM model, you see, we discussed about the availability ratio. There were two losses that were impacting the availability. There were two losses that were impacting the performance. There were two losses that were impacting the quality. And then we need to calculate overall equipment effectiveness, which is the multiplication of all three, which shows that what is the level of operations or productivity my machine is working at. So my machine that is supposed to work 100 hours or produce this much of products with this much of quality, but because of any XYZ reasons, they were not able to do that. So if they are not able to do this, then I need to calculate at what level of efficiency I am working. Okay. So I need to calculate availability ratio, performance ratio, quality ratio. Everything, all details are given in the question only. And then at the last, I need to compare it with the Datel and Nakajima model. So they have given a kind of a parameter that if you're in the manufacturing segment, your availability ratio, that is suppose, just to give you, like, this has to be 90%, this has to be 95%, 95%, right? Sorry, this 95, 95, 99%. And then you can compare with this model that where are you standing. Right? So we need to do this as a sixth question. So the first, you need to calculate the availability ratio, right? Very simple. How much time the machine was supposed to be available and how much time machine is actually available. Simple. So for me, machine was running for 8 hours, 60 minutes, for 80 minutes. The machine was supposed to run for how long? 480, but we had some planned maintenance. So we know that 480 hours is the total the machine will be available, but 60 hours and 20 hours cleanup time, these 80, minutes, they will be the planned kind of unavailability of the machine. So the machine was supposed to available for how many minutes? 400 minutes every day. But there was an unplanned maintenance, which I told you, an abnormal loss, 20 minutes. So the machine was actually available for 380 minutes, while the machine was supposed to be available for 400 minutes. So if I'll do a calculation, it is 95%. My machine is available for 95%. This is the availability ratio. In the same way, I have to calculate the performance ratio. Now, how the machine is performing. So you see, actual productions, how many I'm doing? 5,000. The time that it took for one smartwatch is 4 seconds. So I think this is what I calculated at that moment when I was explaining. 5,000 production, 4 seconds. So it means 20,000 seconds is something that the machine should have been performing at. 20,000 minutes divided by, sorry, seconds divided by 60. How many minutes? 333. This is the output when it comes to performance. The machine is able to deliver. But the actual time the machine has taken is 380, which is available here. Actually, the machine was available only for 380 hours, while in the 380 hours, the machine performed only for 333.33 hours, minutes. Sorry, I'm just taking hours again and again. The whole question is in minutes. So this 380 minutes and this 333 minutes. So 380 minutes is what machine is actually available every day, even after unplanned time and all. But what is happening here, that the machine is able to produce the output of 333 only minutes. So if you'll divide both of them, 87.72 is the performance ratio for the machine. Quality ratio, you see there are 95 defective units that are there. So actual production happened 5,000, defective was 95. So how much, what is the quality ratio? Quality ratio is that how much I am able to produce with the desired level of quality. 5,000 minus 95, 4,005 divide by 5,000. So how much it is? 98%. So for my question, the thing that was given, my availability ratio is 95%, my performance ratio is 87%, my quality ratio is 98%. What is the OEE? Overall, I am performing at 81%. I mean, there is a 20% of a gap. So, do you think we need to improve this 20% or 19 or 18, 18.25%? No, we cannot achieve 100% of the efficiency. It's very difficult to achieve. So, what we have done, we have an industry benchmark. I mean, I am okay. If everyone in the industry is, let us suppose, is able to achieve this level of efficiency only, 81.75, then the 18.25% of inefficiency is normal in this industry. And that 20% or close to 20% of inefficiency is what every company will be charging from customer only. Simple. But since I need to check the industry standards, which is the model which was given. So the when we're talking about the industry's standard is which is given by the Nakajima and all. It is 90%, more than 90% for availability. For performance, it is more than 95%. For quality, it is more than 99%. Okay, and my actual is it is 95, so I'm really doing very good with availability, better than industry. Performance ratio, my machine is performing at a very low rate. 95% is the required or more. We are at 87%. Quality is also something that I need to improve because quality standard should be 99%. It means in max to max, how much is allowed is 1% is the defective piece which is allowed. So 5,000 units are being produced. You should not have more than 50, 1% of 5,000, 50 as defective pieces. Okay, but we are having at 95 pieces. So we are again, we need to improve on the quality aspect. The overall effectiveness is 81.75 for the company, while the you see the standard is 85%. That's what I was saying that we need not to improve and make it to 100%. At least for the industry level, we need to make it to the 85%. So that I can. So this 3.25%. How we read it? Just imagine this 3.25% is the gap is basically a abnormal loss, and I'll not be able to charge customer for this. So if I'm not charging customer for this gap, then this is a pure cost for me. It's a pure expense in my P&L, and it is reducing, it is eating my profit basically. And if the management is adamant, and then they will try to push this inefficiency as well, 3.25% to the customers, what will happen? They will end up quoting a higher price to the customer, while the competition will be pricing the same device at a lower price. And if I don't have the right brand to bring premium on the table, I'll be out of the market because my competition will win. They can offer the same product at a lower price. And that's how the brand value also plays a very big role. Okay, you may be sitting at this number, but if you are able to create, let us suppose these 5,000, just to give an example, let us suppose these out of 5,000, 4,025 or 4,005, whatever watches you are preparing, and let us suppose they are marvelous, they are super in quality, then there may be a possibility you can charge premium from the customer. And then if that is happening, then what will happen? This inefficiency is something also that you can charge from the customer. Not in the general scenario, but in the kind of a premium segment. Right. The next question is, given the increase in the price of the equipment between the date of contract and the date of the actual importation, at what value should the imported equipment be assessed as per the customer? What will be the assessable value? So it was like 1 lakh it was earlier 1 lakh 10,000 has no relevance because the price increased after my purchase. and 20,000 was already a kind of a precondition. So my accessible value will be 1 lakh plus 20,000, 1 lakh 20,000. Hmm. As per section, the value of the equipment will be the actual price paid or payable, that is the transaction value for the equipment. In this case, the transaction value will be 1 lakh dollar, which is the price of the contract and the amount actually paid by the IWPL to the exporter on April 30th. Price increase between the data content where the actual importation is therefore irrelevant for the purpose of valuation under Customers Act, right? Second says IWPL has agreed to pay the exporter as a condition for the sale, the 20,000 as license and service fees post importation of the equipment. As per the explanation to the rule, this has to be included in the value of the equipment as this payment is being made as a, you see, so that's what I was telling you. The accessible will be 1 lakh plus this 20,000 rupees, and it is more or less dependent on the agreement as well, the contract that is signed. If it is mentioned that this is a precondition, the contract will be there, and then it is part of that contract value, then it will definitely be included. Otherwise, you can exclude it. If it is something which is not conditional on the import, then this cannot be. Again, remember, capitalization is different than accessible value. Okay. While capitalizing this asset, this 20,000, even if it was not a kind of an actual condition to the sale, this will also be capitalized in those cases. But for accessible value, it is only possible to add this, include this, if it was a precondition to sale. Okay. What should be the treatment of the license and the service fees has to pay to the exporter post. Okay, so earlier it was 1 lakh, 1 lakh 10,000 will not make any sense. The second thing is basically that 20,000 which is additionally paid, yes, it will be a part because it is a precondition to the sale. And then the last one is the with reference to the IWPL, import of sensors 10 to 8. The department is saying we will, consider $10 only the price because 4% share is there. So the answer is basically that I told you 4% is very negligible. It cannot be considered or assumed that the control is there. In these kind of situations, to prove that the price is impacted because of the control rather than because of the volume, it will be on revenue. It means department. The department has to prove. They have to prove that the price reduction is happening because of the control and not because of the volume. And if department is not able to prove that, then the department has to consider the value as 8 dollar only, which is the revised value after the increase in volume by the company under discussion. Okay. So when I went through this particular case study, I mean, I always say that it is not only you all learning, but we also learn few things when we discuss this in such platforms and we talk about them. It is very, like it help me as well after 15 years of experience to revise some concepts around your models that I just explained, Kano model, TPM model. I mean, six biggest losses and all those things. I mean, it is always really very helpful. So I always feel blessed. I always feel very proud to be part of these IB sessions, and I look forward to kind of sharing my knowledge in upcoming sessions as well. So for today, thanks a lot, everyone. I'll quickly check if there are any questions in the inbox, and if there are any, we can take them up. Otherwise, this is all from our side. I wish all the, so there are no questions in the chat box. So I wish all the students all the very best for your upcoming exams. And I look forward to seeing you somewhere in the corporate pretty soon. Thanks a lot, everyone. Team, we can call it like a session for today and we can exit from the live session. Yes. Thank you, everyone. Take care. Bye bye.